gentlemen, good day and welcome to the Q1 FY25 conference call of Ceinsys Tech Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody. A very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Ceinsys Tech Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Kaushik Khona, Managing Director of India Operations. Without any further delay, I request Mr. Khona to start with his opening remarks. Thank you, and over to you, sir.
Thanks a lot, Anuj. Very good afternoon, everyone. It's a pleasure to welcome you to our first ever conference call for the first quarter of financial year 2025. Given that this is our first earning call, in the interest of some of the people who may be new to the company, let me first start by giving you a brief overview of the company. Ceinsys Tech is a leading technology solution provider in the IT-enabled sector, renowned for its expertise in geospatial engineering as well as other engineering services and solutions. The company offers a broad range of geospatial intelligence services, including data creation, data analytics, decision support system, enterprise web solutions, and positioning itself as a key player in these domains. In the FY22, Ceinsys strategically expanded into mobility sector by acquiring Allegro Technologies, a specialized engineering service provider with a strong international presence. This acquisition allowed Ceinsys to enhance its capabilities into manufacturing technology solutions, covering the entire product development process and industrial automation for diverse sectors such as 2- and 3-wheelers, passenger cars, commercial vehicles, and off-highway equipments. Ceinsys serves a prestigious global clientele that includes large corporates, OEMs, asset management companies, and government bodies, highlighting its robust reputation in both the geospatial and manufacturing sectors. With offices in India, the United States, the United Kingdom, and Germany, the company combines local expertise with a broad international reach. Additionally, Ceinsys is venturing into software product development and emerging technologies through a new vertical focused on artificial intelligence and machine learning and embedded electronics. This vertical emphasizes advancement in metaverse, edtech, gaming, and mobility, reflecting the company's commitment to innovation and maintaining a competitive edge in a dynamic technological landscape. Now, moving on to the performance of the first quarter of financial year 2025. For the first quarter, the operational revenue was rupees 74 crore, representing an increase of around 37% year-on-year. The company was able to achieve strong top-line growth on a year-on-year basis despite adverse impact owing to general elections, where there was a code of conduct for most of the period. EBITDA reported was around 13 crore, which grew by around 16% year-on-year, and the EBITDA margin stood at 17.9%. The net profit after tax was reported at around 12 crores, which was increase of around 42% year-on-year, while the PAT margins reported at 16%. On our business segments, the geospatial and engineering solutions revenues for the quarter were rupees 42 crores, a small decline of around 13% on year-on-year basis due to some deferred revenues on some projects. The technology solutions revenues for the quarter was 31 crore, which grew by almost 4 times year-on-year. On the operational front, The company successfully implemented major projects like IoT project under the water domain, digital project management systems awarded by the State Water and Sanitation Mission, Maharashtra, under the water domain, and consulting services for third-party inspection projects of various rural water supply schemes at Uttar Pradesh. All these were under Technology Solutions segment. On the business development front, during the quarter, the company was able to generate fresh leads for fresh and renewal of business of almost 270 crores. Of these, contract closures of almost 50 crore were achieved. The current order book stands at around 750 crores, and a bid book pipeline of around 200 crores is being pursued. With that said, we can now open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Suresh Pal from Avendus Spark. Please go ahead.
Thank you, sir, for the opportunity. Am I audible, sir?
Yes, you are. Sureshji.
Sir,
go ahead.
Sir, my question is, I'm new to the company, so can you please explain what is the tailwind that we are seeing in our company?
Well, as I introduced, the company is primarily into IT-enabled sector, and there is a special focus on the geospatial vertical. As you may be also aware, the Government of India, through the recent finance budget, has given a huge emphasis on the various projects which are geospatial related, including the land and other records mapping for the rural and urban area. On top of it, the company is providing the technological solutions, and it's not in the pure play of providing any products. So we are into providing solutions, complete solutions, including development of software wherever required. The company is in the area where there is a huge growth opportunities. The sector itself is growing substantially well, as you may be aware, and the growth potential of these sectors have also been multifold through this budget, which has been stipulated in the month of July 24. And therefore, we see a huge opportunity for the growth, and we see good tailwinds as regards the growth opportunity, and we don't find any headwinds in this sector as of now.
So, sir, can you please explain what is the rate of growth that we can expect for our company in the coming years?
So, as I think we already mentioned, we would not be giving any forward-looking statements, but you would be aware that the sectors which we are into are growing in the range of around 20 to 25 to 30%. And we are also benchmarking our growth to the sectoral growth. We want to be better than the sector, and therefore the growth expectations could be of a similar nature. You could also see that in the performance of the past years, we have grown on a 25 to 27% in the last 1 year, which is the history. And as we already have mentioned about the order book, we have almost 750 crore worth of order book, which we are to execute in the period of next 2 to 3 years. So we expect the growth to be in line with the targets, as well as the overall segment growth, which we expect in the range of around 20 to 25 to 30%.
Okay, thank you, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Guneet Singh from Countercycle PMS. Please go ahead.
Hi, sir. Thank you for this. Thank you for your time. So, you made an acquisition recently. Can you just share some numbers regarding the revenue, top line, bottom line of that acquisition, and whether it has been consolidated in Q1 numbers?
Thanks that you are keeping track of the company. We recently acquired VTS, which is in the geospatial area, and this company is based in US. It's a small company to begin with because we wanted to have a presence in geospatial for going further into the geospatial area at US. The company itself had a top line of around 3.5 million to 4 million year on year, and we expect that the growth of that growth of that company, we will be able to push further once, because we also have started deploying people over there for the growth of that business segment. The VTS has been recently acquired. It is on in the month of July. These companies have been taken over by an asset, and the business is now being populated, and therefore it's not included in the quarter results because the acquisition has happened after the end of the quarter.
So let's just know basically 3 to 4 million top line would be added Q2 onwards, basically.
Year on year, that's the potential which the company had in the past. So we expect that to continue or maybe improve further. But for that, we are doing all further efforts by putting more people over there to grow the geospatial segment focus in US.
And what kind of margins do we see there?
US margins are not so heavy as in India. The company which we have acquired had the historical margins of around 14 to 15%. However, once we expand, and it remains to be seen how much economies of scale we are able to obtain. But in US, margins of around 10 to 15 to 18% are said to be good enough.
Alright, sir. So we recently planned to raise money. I mean, so do we have any big acquisitions in the card this year? Are we working in that direction? What kind of target acquisitions are we looking at? Can you please throw some light on that?
I think it's a very relevant question. You must have seen that since March onwards, 2024, we have already authorized the company to raise fresh funds by way of preferential allotment of shares and warrants. The overall fundraise will be in the range of around $25 to $27 million. All this is for the acquisition, and we have already appointed the agency which is CARE Rating, who is going to monitor the funds. The issue of the raise of the funds is still not happened. It will happen once we have timed it along with the acquisitions which are being lined up. We are in the process of we have identified few acquisitions, but right now it will be premature for me to identify and highlight which are the acquisition targets. The acquisitions, however, I can say that they will be in line with the existing line of business, which is the engineering solutions, the geospatial solutions, as well as technology solutions. One area which we are also focusing, which you must have seen, is that we are also trying to add value by focusing into setting up of the data centers, which is a tech-enabled center, where we are not into the setting up, the physical infrastructure setting up. We are into the consulting part, and we have already set up a 100% subsidiary at Singapore, for which the board has authorized for the investment of around 5 crore into the equity of that capital. The company has also appointed a very renowned and experienced professional who has exposure of setting up data centers for over the last 18 to 20 years in Singapore and in APAC region. And we expect that also to be given a good focus in this coming 2 to 3 quarters, where we can find out new avenues to add our top line.
Right. So, sir, is it reasonable to expect about 20 to 30 CR revenue for the potential target because of the kind of funds that we're raising? And also, sir, setting up of data centers, what is the rationale and what kind of leads or order pipeline, or, I mean, what gives us the confidence that we will be able to establish ourselves in that domain, given that we have not been present in that?
So one thing which gives us that confidence is, first of all, the investor who is the prospective investor who is going to fund these new preferential allotment. they themselves had a very good kind of history and setting up of the data centers, and they are also giving us some leads and help on to these avenues. The data center, as I said, we are not physical data center setup. We are why we have identified, because it's a huge tech-enabled area which we see a good focus. In fact, as per the study reports which we have had, there is a growth of the data centers business alone of more than 25 to 30% in the APAC as well as in India. And we are talking of large data centers like those set up by Amazon or Google and all. And therefore, we see a lot of potential to set up those as additional avenues for our consulting business.
Right. And so as per the target acquisition, is it fair to expect a 20-25 million top line, considering the kind of funds
I think as I said, we have still not signed off any further acquisition except the VTS, which we already mentioned about. Once we are able to sign off, we will be able to publish that into the stock exchange, and we will be able to give you further guidance on that.
Perfect, sir. My last question would be regarding the EBITDA margins. So directionally, can we expect to maintain 20% plus margins? Just in the directional sense, I don't want any specific numbers. And also considering that the industries we're in are growing at 20-25%, and we want to grow faster than that. So can we reasonably expect 30% to be a good number for growth for the coming 3 to 5 years?
Well, I think, as I said, yes, I don't want to again be mentioning about any guidance of future, but we have our own targets to be ahead of the industry, and we are working on all the projects, and the projects which are in pipeline have a net EBITDA margin in the range of around 20, 25, 30%. So I think over a period of this financial year, we will be able to see the sustainable improvement from the margins which we have been reporting year on year. And if you see the last 3 years margins also, they have been steadily enhancing and improving from 22 to 23 to 24. And we are on the track to see that the sustainability of the growth of margins also sustains.
Perfect, sir. Thank you very much. I'll join back the queue for more questions.
Thank you.
Thank you. The next question is from the line of Richa from Equity Master. Please go ahead.
Sir, thank you for the opportunity. Could you, I'm new to this business, could you help me understand what is the percentage of business or revenue from government? Is it a tender-based business, the order book that we are talking about? Also, if you could talk about the breakup of this order book of 750 crores, what are the constituents of this order book?
Sure. So predominantly, before 3 years before we acquired Allegro, we were more so 95% onto government businesses. After the acquisition and after going further into corporatization of the business, the present government business is in the range of around 65 to 70%. The order book of 750 crore, which I mentioned, the breakup of that mainly provides into two. First of all, segment-wise breakup. Out of that 750 crore, around 550 crore is towards the geospatial and engineering services, and around 200 crore plus is towards the technology related solutions services. As regards the government exposure, the government businesses is on the basis of the tenders, and many of them are in respect of the same water-based or the smart city solutions which we provide through geospatial. So these are the focus areas where we are having our expertise, and we try to tap the opportunities wherever available from the government auctions, tenders where they are available.
Okay, and sir, could you name some of the peers or competitors who are operating in the similar area in India? And how does this order book look on a year-on-year basis? What kind of growth it has been there?
Yeah, so I would not be able to identify a one-on-one competition, because we are into 4 or 5 major business segments. As we said, we are into geospatial, one can relate that to perhaps to that element. We can relate to the CE Infosys, which is into Map My India kind of. But it is again a product. We are not into the product. If we look at the technology solutions, we have some companies which are based in Nagpur or who are based in Mumbai also, which are of the similar size and which can be kind of compared. But if you look at the kind of the bouquet of services which is offered by the company, I have not been able to come across any company which is an apple-to-apple company. So that's my take on the competition. What was the second question? I missed it.
It was about the progression in the year in the order book. How does it look on a year-on-year basis?
So I can give you the past in the sense when we started 2023-24, our order book was in the range of around 250 crore. When we closed the year 24, we were at around 700 crores. After execution of around 65 crore of project, we are again at 750 crore. And I said that there is a pipeline of the tenders which we are already tracking as of now of around 200 crore, of which there are 70% of the tender pipeline we are already L1. So we hope that it could fructify, although I cannot give a guidance because that's all subject to the final government approvals wherever they are in relation to the tenders and invites. And going forward, we are trying to focus more on similar exposure of geospatial and smart city solutions, going into the different states like we are having major presence in Maharashtra and we are also having presence in Uttar Pradesh. We are trying to tap further into the states of Chhattisgarh, Madhya Pradesh, Jharkhand, Delhi and Rajasthan, where we already have people and infrastructure based. So these are some of the states which we have identified to go into and tap further opportunities. I think the order book position we will be able to update it on a quarter-on-quarter basis at the time of every periodic reports which we publish.
Okay. And sir, typically, historically, what has been our strike rate? Like, like you mentioned, the pipeline is of 200 crores. So historically, what kind of success rate do we have when we bid for these tenders?
To be very frank, we apply where we feel that we have the ability to strike the deal. And historically, we have had a strike rate of almost 90% plus. So it's something where after having done our diligence, after having seen that we have good capability to execute the project, there only we apply. And that's where we try to see that we meet the criteria of technical qualification as well as ensure that we also are kind of competitive on the commercial part. So far our strike rate has been in the range of around 90% plus.
Okay. Thank you very much.
Thanks a lot.
Thank you. A request to all the participants, please restrict your questions to 2 per participant. If you have any follow-up questions, you can rejoin the queue. The next question is from the line of Ankit Minocha from IDC Ventures. Please go ahead.
Yeah, hi, good afternoon, and thank you to the management for starting the investor conference calls. I think this is a great initiative. Overall, my first question was regarding the order book as well. So if you're talking about a 750 crore order book in the next 2 years, that is substantial growth over our last year number. So firstly, do we have the execution capability currently to execute a 750 crore order book over the next 2 years? And secondly, what would be the average or a margin profile of this current order book?
I think a very valid question, and thanks for your compliment. You are right. The order book has execution timeline of 2 years and 2 to 3 years in some case, because that also includes the O&M part of some of the orders. Capability-wise, we have added a lot of capacities over the last 6 months, where not only the execution part, we have also ensured that our systems are further upgraded to see that the execution are being monitored centrally. As of now, we have the order book which we are trying to tap. We have ability of execution and the capability even on the technological side as well as management side. So we don't see any challenge in execution of even a higher order book as of now, and we are trying to therefore tap further. As regards the margins of order book, which we have already kind of signed off, the gross margins are quite good, and I think we should be aiming, as I said, again, I should not be mistaken to give any kind of guidance, but going forward, we should be able to achieve our targets of having a higher EBITDA growth on a sustainable basis between 20 to 25 to 30% in the next 1 or 2 years.
Right. Thank you for the clarity. And my second question is with regard to seasonality in the business. So I was just kind of looking at the quarter-on-quarter numbers, and for example, the June quarter was very strong last year, and it also comes strong this year. But then we saw some kind of a dip in quarter 2 and quarter 3. So is there a seasonal element to the business wherein these executions and tenders are executed more over a certain point of time, and should we be taking that into account?
Let me first of all clarify, these all projects which we do are little long-term projects, in the sense they either span from 9 months to 12 months to sometimes 2 years also. And typically they are, we therefore have a structured way of doing business which we measure, although the measurement obviously happens quarter on quarter, but the kind of the cyclical fluctuations which could happen gets evened out on a yearly performance parameter basis. So I would rather look at the performance on a year-on-year basis, and there may be various reasons for a specific quarter performance. For example, we just said that this quarter we had COC, which is the Code of Conduct. But without going into such kind of reasons, we normally have a cycle where financial year end is the measurement, because even these clients, whether it is government or corporates, they also want the project to be kind of measured at the end of the year, and therefore we would also measure our performance through the financial year performance. So quarter on quarter fluctuations may remain, but because it's, as I said, it's an ongoing project, and sometimes the timelines to invoice a particular element of the execution may not have been attained. But over a year, I think that can be measured on a seamless basis.
So if I'm understanding correctly, then Q4 is your strongest quarter usually?
One can, if you look at the last year, quarter 4, normally what happens is financial year end is where people take to the clients ensure that let's measure ourselves, and that's where normally whatever pending issues are normally getting addressed at within the year itself. That's why I said we look at the financial year, and typically quarter 4 happens to be that way of closure. So year on year, if you have seen, perhaps the quarter 4 would be a kind of a balancing quarter where whatever has not been billed, not been achieved, those timelines also get fructified over there.
Right. Thank you so much. Yes.
Thank you. The next question is from the line of Pritesh Vora from Mission Street, India. Please go ahead.
Hello, sir. Good afternoon. Thank you for opportunity. My question is, sir, your margin has come off this quarter, and I just also want to understand the client profile. Who are our client and whom do you serve? Is this a tender-led business or there is a fixed client? And if it is a client tender-led business, what is our order book position as of now?
Thanks for joining. I guess you must have joined a little later. Most of the questions which you have raised, I will just repeat them. Yes, it is 70% of the total business is government business, which are awarded through tenders, and therefore they are in relation to those